Welcome everyone to Best in Interest. This is Shane back for a stock pick of the day video. It is Monday, June 9th. We're going to take a look at Allstate. This is an insurance company out of the financial sector. Before we get too far into the video, if you could do me a big favor, it really does help out a small YouTube channel like mine. If you can hit all the buttons down below, the thumbs up, make sure you smash that subscribe button, join us on this journey to financial freedom, join the Best in Interest community, and click that notification bell so you're notified whenever I put out any new content. I do this stock pick of the day video series Monday through Thursday. We take a look at a company stock that's pulled back on the day, run it through my screener. We'll see that screener here in a minute. Special thank you to all the viewers and subscribers of the channel. Really do appreciate all of you guys and gals out there. The channel continues to grow because of people like you. This is the Best Interest Stock Screener. This is the criteria we will be running through today. It is out of the financial sector, so we will be adding in price to book, and it must meet 6 of 9. Now, if it was to make it onto my watch list, that does not necessarily mean I am buying. It means I am interested in doing more of a deep dive into the financials of the company. Out of the thousands of stocks out there, I ran it through the screener and said, oh, this is one I want to do more of a deep dive, spend some more time on. And even if it makes it in my screening process, if I'm not adding any new stocks, I may not necessarily add it, even if it does meet the criteria. All right, back to Allstate. Check them out on their home page if you want to know more information about them. www.allstate.com. That's www.allstate.com. That is their homepage where I pull this information from. And they are an insurance company. Automobile insurance, that does include RVs, your motorcycles out there, trucks, cars. Basically if it's got wheels and a motor, they will insure it. Homeowners insurance, that includes renters insurance, condo insurance. If you own some rental properties, they'll set you up with landlord insurance, renters insurance if you're a renter. Identity restoration, so they do have some identity protection that they offer, packages that they offer as well. Phone protection. Almost if you're own it, if it's a piece of property that you own, they will insure it. Really, they're a property and casualty insurer, right? That's what the identity restoration would fall under, I think, casualty insurance. But they don't do stuff like health insurance, right? So they're not in the healthcare, but they are in like the property side of the insurance business. Now, the reason we are taking a look at them, down 3.04% on the day, we are talking about the Allstate Corporation, ticker ALL, out of the financial sector. This is an insurance company here. You probably have heard their jingle online, in good hands with Allstate. That's really their catchphrase, I guess. Closed out the day at $200.74. 52-week range as low as $156.66, as high as $213.18. They are not within 15% of a 52-week low. They are much closer to their 52-week high than they are their 52-week low. Would need to drop to 180 and some change or lower. Anything under 180 would be within 15% of a 52-week low. Market cap of $53.202 billion, a beta of 0.34. So they are a very low volatile stock. They do not move around a lot and they don't have big swings. Right? If you're looking for a low beta, this is the type of stock you'd want. Price to earnings ratio, PE ratio at $13.71. Earnings per share is actually higher. One of the few times, we see it every now and again, one of the few times you see the earnings per share higher than the price to earnings at $14.65. Earnings date July 30th. So coming up here next month, at the end of next month, forward dividend is $4. They are quarterly payers, so divide by 4, with $1, though we'll see that here in a little bit. Yield, it starts at 1.92%, at least if you were to buy them now. Ex-dividend date, June 9th. So that was today. Probably part of the reason for the drop was that ex-dividend. And 1-year target estimate, at least according to Yahoo Finance, according to Yahoo Finance, it's $227.59. So they do see it setting a new 52-week high over the next calendar year. Now, ex-dividend date was June 9th. Looks like they're going to pay out on July 1st. Jumping over here, I like to look at dividend yield theory as well. To do that, we look at their 5-year dividend yield average, 2.38%. We compare it to their current 1.92%. Since their current dividend over here, forward annual dividend, same number, 1.92. Since that is lower than their 5-year dividend yield average, that speaks to overvaluation. At least according to dividend yield theory right now, this one is potentially overvalued. Payout ratio is low at 25.68%, so they've got a lot of room to continue to raise that dividend. Doesn't look like they're in any danger of cutting it anytime soon. I like under 75%, so that is much lower than what I'm willing to accept. Now, dropping down, looking at their price to book, we want a 1 or under to be undervalued for financial companies. They're at 2.75. You can also compare them historically, at least over the last year and a half. You could go back a little further if you wanted to pay for Yahoo's service and go back in time a little bit. I just look at the past year and a half, what they offer for free. And you can see here, you could have bought them cheaper a year ago at 2.53. So they're not as cheap as they've been right there at December. You could have bought them a little bit cheaper at 2.71. At 2.75, they're kind of in the mid-range of that 2.5 to 3 that they've been bouncing around for about the last year and a half. 2.9 back in March of last year, 2.5, like 5.3 this time last year. Got up to in September a 3.03. December 2024 was a 2.7, so that was still a little bit cheaper than it was right now. March got up to 2.82. So they're kind of in mid-range of where they've bounced around over the last year, at least according to their price to book. Dropping down, looking at free cash flow, I want growing free cash flow over time, because a company with growing free cash flow, they can do some things with it. They can pay down debt, they can make acquisitions, reinvest back into the company, buy back shares, pay a dividend, which this company does, raise that dividend over time, or even keep some of that cash on the balance sheet as cash for a rainy day. So looking at December 2022 here, going back in time, 4.7 billion in free cash flow. Looks like it dropped down in 2023 to 3.9, 2024 back up to 8.7, trailing 12 months 8.9. But keep in mind, we're only in June, so half of the year here, we're not even through June yet. So a little over half of the numbers for the trailing 12 months would still be 2024 numbers. Repurchase of shares, they are pulling shares out of the market. We'll have to see if they're doing it efficiently at the end, but looks like in 2022 they bought back 2.5 billion. 2023 was down to 910 million. 2024 down further to 2 million. Trailing 12 months 101 million. So it looks like they're continuing that trend. Jumping over to stockanalysis.com, another source I go to for information. Again, not affiliated with stockanalysis.com or Yahoo Finance. I wish they paid me a fee to plug their name, but they certainly do not. Maybe one day. We'll see. But according to the 15 analysts they have over there on their site, they call it a consensus buy. They have a low estimate of $172. That would represent a 14.3% decrease from where it currently sits. That would also put them within 15% of a 52-week low. Average estimate of $223.20. That currently is 11.21% higher than they currently sit. And if it happened to hit their high estimate of $267, and that's pretty close to what we saw with Yahoo Finance too. If it happened to hit their high of $267, that would represent a 33.03% increase from where it currently sits. And you could collect that, $4 a year dividend if you held them for a year longer. Now, going back over to return on capital employed, I like to look at this metric to see how efficiently and effectively the company is reinvesting its capital back into itself. And I like 10% or better here. They're sitting at 13.86%, so beats 10% I'm looking for there. Earnings per share growth, I'm looking for 5% or better forecasted over the next 5 years. They don't have anything listed, so I'm not going to be able to give them a check there. That's why this is one of the reasons I would recommend more than one source. You might be able to find that on a different source. Revenue growth forecasted at 4.18%. That is really more part of a deep dive that I do, but I like to throw it in here anyway. Quarterly payer, as we mentioned, payout ratio, they're saying 27. I think Yahoo Finance had them around 25, so there's a little bit of a discrepancy there, but still low or mid to high 20s. Dividend growth is 6.08%, so they are growing the dividend. 10 years of growth. Buyback yield is negative. That means they are not effectively and efficiently buying back shares. They are buying back shares, but they are also issuing shares, and they are issuing more shares than they are buying back. That's what that negative shows you. Shareholder yield is positive at 0.06%. We want this to be positive. The more positive, the better. Going back in time, they do pay off a schedule here. January, April, July, October timeframe, so they do pay off schedule. I do like that. Going back in time here, November 29th, in 2022, they paid 85 cents per share. Raised that up February 27th, 2023 to 89 cents. Raised it up again March 2024 to 92 cents. Most recent raise was March 2025 here, up to $1, so 8-cent raise there. And I would anticipate if they're going to continue this growth trend, it'll be February or March of 2026 for their next raise. All right, let's run through the screener here. Understand the business. They're an insurance company. Like I said, they're your automobile, your RV, your motorcycle. If it's got wheels, you're insuring it. They would insure it for you. Your homeowner's insurance, your renter's insurance, your condo insurance. If you're a landlord, your buildings insurance that you're renting out. They offer business insurance as well as personal insurance. So they're an insurer that are insuring the things you own. They do offer some identity protection services as well. So it's pretty easy business to understand, really. Growing free cash flow, that's how they make their money. Growing free cash flow last 4 years. No. Growing dividend, yes. Check there, around 6%, a little over. Dividend payout ratio of 75% or less, yes. In the 20% range, under 30%. Check valuation. Dividend yield theory says they're actually potentially overvalued. No check there. It is not within 15% of a 52-week low. It needs to drop under 180, so no check there. Return on capital was above 10%, so check there. Return on capital employed was above 10%, so check there. And earnings per share growth they didn't have listed. Price to book was not 1 or lower, so no check there. They're 4 of 6 or 4 of 9, I mean. They don't quite make it onto my watch list. Interesting company. I do like that they're an insurance company, so they take in premiums, they hold those premiums, try to make money on that, and hopefully don't pay out more than they take in. That's the float that they're living on. But not quite there right now. Let me know what you think of Allstate in the comment section down below. Is it a buy for you? Is it a hold? Is it a sell? What are you thinking there? Do you hold Allstate? How long have you held it? Would love to hear from you in the comment section down below. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of Allstate. Let me know what you think of the video. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock of the Day video series, drop it in the comment section. I'll work it into the rotation on the day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing during educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.